welcome to Market Insight this lovely Friday morning on Sook News Television here at the CBD in the city of Lagos, TGIF. Thank you for joining us again. I am David Chiedu. Now, amid soaring inflation and rising food prices, the Central Bank of Nigeria has again raised the monetary policy rate, MPR, the benchmark interest rate, from 26.25% to 26.75%. The CBN Governor, Olayemi Cardoso, announced this after the Apex Bank's 296th Monetary Policy Committee meeting in Abuja on Tuesday. He said that the committee was mindful of the effect of rising prices on household and businesses and expressed the bank's resolve to take necessary measures to bring inflation under control. Recall that in the past 3 years, the Central Bank of Nigeria has raised interest rates 12 times. Nigerians, however, worry what this could mean for them, considering recent minimum wage issues, significant depreciation of the naira, and high PMS prices, which have negatively affected transportation costs. Now, today we talk about the raised MPR and what it means for Nigerians and businesses in today's economy. To speak on these and more on the program this morning, we're joined by Mr. Aruna Kebira. He's an economist and the MD CEO of Globalview Capital Limited, a broker-dealer firm with the Security and Exchange Commission, as well as a trading license holder of the Nigerian Exchange. We will get into the conversation very shortly, but first off, we will take a look at the stock market for the previous trading week. Stay close. This is Market Insight. Now, at the end of yesterday's trading session on the Nigerian Exchange Limited, a total of 366,264,019 shares in 8,197 deals, corresponding to a market value of 6,881,403,736 naira were traded. Compared with the previous NGX trading day, which was Wednesday, July 24, Thursday's data showed a 26% decline in volume, 20% decline in turnover, and 3% decline in deals. Now, the current market capitalization of the Exchange Limited is 56.7 trillion naira. In the aggregate, 123 NGX listed equities participated in trading, ending with 12 gainers and 25 losers. Custodian and Allied led the gainers with 8.51% share price appreciation, closing at 10 naira 20 kobo per share, followed by Livestock Feeds up by 3.91%. Wapik Insurance went up by 3.9% and Owando up by 3.06%. On the losing side, Omatech Ventures came out last with an end-of-day price depreciation of 10% at 63 kobo per share, followed by Qtix, down by 9.51%. FCMB Group went down by 8.75%, and Linkage Assurance down by 7.53%. In the financial sector, Fidelity Bank recorded the highest volume of 53.4 million traded shares, followed by Zenith Bank, recording 40.6 million shares, Guarantee Trust Holdings 27 million, Access Holdings 23.3 million. Regarding the performance of the Nigerian Exchange Limited's market indices, the benchmark NGX All-Share Index pared 208.21 points, close at 100,156.96, representing a 1-week loss of 0.34%, a 4-week gain of 0.77%, and an overall year-to-date gain of 33.95%. Other remarkable indices that performed were the NGX Top 30 Index, including Oil and Gas Index, the Industrial Index, Main Board Index, Consumer Goods Index, and the NGX Premium Index. And that's our stock market report for the trading week. As I mentioned earlier, we're being joined this morning by an economist and the MD CEO, Globalview Capital Limited, Mr. Aruna Kebira. Good morning, Mr. Kebira. Thank you for joining us.
Good morning. Thank you for having me.
Right, so let's get your thoughts on the issue. We saw what happened at the MPR on Tuesday with the Central Bank of Nigeria's governor, Mr. Cardoso, making that announcement. Now, the uptick in prices for the 18th straight month means that the value of the naira has fallen further and purchasing power has shrunk even more, pushing many households into the poverty threshold. As a matter of fact, the World Bank estimates that more than 87 million Nigerians have been pushed below the poverty line, and it's made us the world's second largest poor population after India. Now, is there an upside to all of this following the CBN's recent action, or is it going to get worse?
Sorry, if I may have to start. Sorry if I use proverbs. In my place, they say you don't throw away the pressing cloth until the wood is healed. And what I will also want us to do is to have a retrospect on what actually happened, what stoked this inflation. And I will always give it to the CBN because I actually believe that the banks in Nigeria they are on top of their game because we have a two-pronged element that's supposed to control the economy, the fiscal and the monetary. So since the fiscal is not there, the central bank has tried as much as possible to use the monetary policy to control the economy. Yes, there was an increase of 50 basis points in their last meeting, which is not as high as what it has been. Remember, from December to January, we saw 600 basis points. After that, we saw 150 basis points before we saw 50 basis points. I used to tell people, yes, they are increasing it, but it's just telling you that it's increasing at a decreasing rate, which means that there is, after all, there is a light at the end of the tunnel. And like I said, you don't throw away the pressing cloth, but if the saw is healed, the inflation keeps up rising. But another good thing too is that inflation too is increasing at a decreasing rate. And the market is having that thought that there will be a situation that there will be a convergence of the two interest rates. Then the CBA will now have every reason to tinker with the MPR downwards. Yes, people are suffering. The IMF can say whatever they want to say, but the only thing is that the solution is not here yet, but you have to control it. I think that is exactly what the CBN is out to do.
Now, in the bid to control it, many have seen what they've done in recent, times, but there's some stakeholders, one of which is the organized private sector. They've had a thing or two to say about it. In fact, they actually warned against a hike in interest rate. Some others also advised the CBN to put on hold this particular move for now because specifically the monetary policy instruments have been practically overstretched, in its course to tame inflation. Do you share this sentiment, Mr. Kebira?
Yes, I would say that same sentiment, but like I said, do you think that they're really going to stop? I think in the public space, what normally obtained is that satisfied the public. The public interest override the private interest. If you are talking about that association that is talking about the increase, because they are feeling their own. But is it actually good for the nation? If this inflation, the drive to rein in inflation by the CBN, at the end of the day, who is it going to profit? Is it the CBN? Is it the Nigerians or that association? And you see, when policy comes, policy can either make you or mar you. Because policy can favor one person and disfavor the other one. Policy is not a light sweet bulb that you just put on and light comes out. It has multiplier effect. But at the end of the day, if the CBN get to where they actually go to get to, that same organization will come to benefit from this exercise that CBN is doing.
Now, I'm going to harp on your thoughts of, whether or not it would affect the public or affects the wider majority, the private sector, beg your pardon, as I mentioned earlier, that's the organized private sector were the ones who shared that sentiment, or it's affecting the wider majority of Nigerians who are, not any better off considering, what's been happening. But I'm going to ask, I'm going to ask now, as far as your thoughts, based on the last question I asked you was concerned, how exactly is this going to be beneficial? Because you pointed, and rightly so, that the organized private sector who are speaking because they are already feeling the pinch. Yes, but speaking generally now to the average Nigerian, how is this going to affect the average Nigerian business that is struggling? We're talking about the local trader on the street or the local store owner down the road. How is this going to affect them?
Now, let's take it first. Why the CBN need to increase the MPR? Because inflation is increasing. It is believed that whether we like it or not, most investments in Nigeria are by foreign investors. When inflation is increasing and your interest rate is far, far below inflation, nobody is interested in your economy. So what the CBN is doing is try as much as possible to see make that threshold, that inroad for the FDIs to enter into the economy. We are talking about the valuation of the naira because there is a pressure on the naira for import. They are believing that when they open up that road for the FDIs, they will come in with the dollars, and the dollar will be available for the forex market, and that will transcend every sector of the economy. Like I said, it's not a light bulb switch. It's not something that you just do today, but tomorrow it begin to happen. If you look at the capital importation for the month of May ended by the MBS, you discover that yes, money came in, but the investable fund are looking for better yield. An average foreign direct investor understand how the bond market work. A bond at 21%, I don't know whether, because they know that it might not subsist, it might not last. So this the inflow of that dollar that will come and stabilize things that will benefit the organized labor. Because what do they need? They did the dollar for export of their raw material. But at the short run, they will feel the pinch. At the medium to long run, everybody will benefit.
Okay, speaking about everybody benefiting and something you also just said right now about investors, there's some thoughts in some corridors that they might at this point in time gravitate more towards that. We first of all get more investors gravitating more towards the fixed income market due to higher yields. What are your thoughts on this?
Do you know that people that invest, they don't invest based on sentiment? What they are is primarily in their mind is return on investment. As far as an investor is concerned, is the yield. So, like I said, the capital importation by the MBS at the end of May show clearly that the percentage of it is gravitated to the fixed income and the money market, because that is where the better yield is, and that is why we are seeing the situation we are seeing in the stock market as we speak. And remember, there is this theory, circular flow of income. It's the same investable fund that was in the stock market that have moved over to the fixed and money market. And if there is any change in policy, then they will come back. It's something that we have to bear with, because already the last auction for TBs 365 days was 21.6%, and which is very, very unprecedented. And I also discovered that the clients that were trying to woo to buy into the Nigeria service bond, then at 11%, at 12%, I would tell you that what can this one give to me? I didn't want clamoring for it at 18.5%. So the money market is bullish while the stock market is bearish.
The Monetary Policy Committee, MPC, of the Central Bank of Nigeria, CBN, held its 296th meeting on the 22nd and 23rd of July 2024 to review recent economic and financial developments, as well as assess risks to the outlook. 11 members attended the meeting. Decisions of the MPC. The committee's decisions are as follows. 1, raise the MPR by 50 basis points to 27.65% from 26.25%. Adjusted the asymmetric corridor around the MPR from plus 100 to minus 300. to plus 500 to minus 100 basis points. Retain the cash reserve ratio of deposit money banks at 45% and merchant banks at 14%. Retain the liquidity ratio at 30%. Considerations. The committee was mindful of the effect of rising prices on households and businesses and expressed its resolve to take necessary measures to bring inflation under control. It re-emphasized its commitment to the bank's price stability mandate and remained optimistic that despite the June 2024 uptick in headline inflation, prices are expected to moderate in the near term. This is hinged on monetary policy gaining further traction in addition to recent measures by the fiscal authority to address food inflation. In its consideration, the committee noted the persistence of food inflation, which continues to undermine price stability. It was observed that while monetary policy has been moderating aggregate demand, rising food and energy costs continue to exert upward pressure on price development. The prevailing insecurity in food producing areas and high cost of transportation of farm produce are also contributing to this trend. Members were therefore not oblivious to the urgent benefit of addressing these challenges, as it will offer a sustainable solution to the persistent pressure on food prices.
That was the CBN Governor, Mr. Olayemi Cardoso, at the MPC meeting just on Tuesday, where he unveiled the new MPR rate to 26.75%. And that's exactly what we're talking about today on the program, Market Insight, what it means for Nigerian businesses in today's current economy. Mr. Aruna Kebira, who is an economist, joins us this morning on the program, who, by the way, has given us a wee bit of his thoughts. But then, of course, we are delving even further on the conversation. Businesses vis-a-vis borrowing cost, and even for individuals, as he were, there is the question as to what the implications of this new MPR rate would be for the aforementioned.
Yeah, for every increase in MPR, we actually increase cost of funding, cost of borrowing, and which will come back to impact on businesses. The standpoint I'm doing this morning is not to disparage anybody or to support the CBN governor, but I just believe that that is what it is to do, because as I was on my way this morning, I wanted to branch above buy fuel. The last fuel I bought was 690, but this one I saw this morning was 770. So the effect is that, you see, that we are facing. When you increase the MPR, the rates, especially at the bank, necessarily have to be adjusted, because the moment rate is increased, investors will have for better returns. So the banks, the deposit bonding banks, will increase their rate, and that will increase even sometimes the position you are even locked in, especially where you have already borrowed, which means that your interest rate has increased, and that goes back to your operation. Because there is no manufacturer that will absorb every increase, because if it does, that means it's going out of business. But the first implication is that cost of production will go up and capacity utilization will diminish. And when there can be a total shutdown, and when that happens, the output will also diminish. And there will be redundancy. Redundancy will lead to unemployment. So it's a problem that actually can compound. But like I said, it has to be done, because what was supposed to be done to contain inflation in the beginning was not done. So what the CBN is doing is try as much as possible to see how do we contain this rising inflation. And it is also believed that mopping money out of circulation, because that is the basic principle of inflation. We believe that it is more money drive if you good. So we want to contract the economy. It's a contractionary measure. So it affects both businesses, it affects individuals. Definitely that is felt by everybody, including yours sincerely.
Now, in the event that what you said happened, which I reckon many other analysts have said and many other stakeholders have said will happen, between now and when there possibly could be a stability, what could be the buffers in between?
See, there was this thing that they taught us in biology that when an amoeba encountered an adverse situation, it formed a cyst around itself just to survive. The only thing now is survival. You can see, if I can hear his report that they said in the near term, because like I also tell you that because inflation increased by 1.99%, MPR was increased by 600 basis points. And subsequently, you can discover that the inflation is increasing at a decreasing rate. And that is actually what the MPR is also doing, increasing the MPR rate at a decreasing rate. Like I said, that there could be a convergence one day that will now give the CBN the latitude to begin to reverse it downward. But for now, it is bearing it. I don't think there's anything anybody have to do. You want to get maybe for those of us that's investment, is you leave variable income to fixed income.
Now, how exactly does this new development affect the government's ability or affect the government's fiscal policy, first of all, and its ability to finance its activities?
The MPR?
Yes.
I don't think the MPR is actually touching on the government. The only reason that we saw that the government cannot carry out its part is by having deficit in their budget. Because of the fall in our oil production, the oil receipt is low. And you can see that this government is trying as much as possible to complement the other leg through taxes. And the last time we heard that they are targeting Forex gain from the banks, they want to tax it, and they also understand that they're also looking at dormant account and see whether there are balances there that they could use, because the oil receipt has fallen down because of the insecurity and the resurgence in Niger Delta.
Much has been said about the plus sides, and also much has been said about the reverse, as you were. Mr. Aruna Kebira, who is an economist and the MD, CEO, Globalview Capital Limited, has been our guest this morning. Mr. Kebira, let's get some more of your thoughts. We were just speaking off camera a second ago. There's some belief that despite the recent uptick in inflation, prices are expected to moderate, just as, Mr. Cardoso and a couple of other stakeholders, and even yourself too, have alluded to. But the prices are expected to moderate. Yes, we get it. But there could be some downside, as also has been pointed out by some other analysts and some other stakeholders, as you were, so downside risks to this particular expectation. Consumer prices may face further pressure. What's your take on this?
Well, in life, we are faced with risk on daily basis. How we are going to bear this risk? How we are waking up and driving our cars a risk. Yes, it is expected that prices may moderate in the near term. Why is it that I used to give this analogy that if a closed door and somebody's on the other side, that you open the door and the guy throw a jab at you, you can't dodge it because we are not expecting it. But if you close it back and with that expectation that somebody's at the other side of it, you'll be cautious while you are opening the door. And if you throw the second jab, you will dodge it. So we have seen prices have been increasing. Like I just said, from into the year, we saw an increase, a tremendous increase in the inflation rate of up to 1.99. The last time was 0.26. And we saw that the CBN rose to combat that increase by 600 basis points. And the last one was by 50 basis points. It's both inflation is increasing at a decreasing rate, which means that yes, it's increasing, but it's not increasing by that magnitude. It's showing that there is a slowdown. And another way we are putting the hope is that if you understand that this is the season of harvest. Yes, we don't have as much farmers as in the market as before, but at least there was a scarcity because it was a planting season. So by the time the harvest come, there's a possibility, because what is actually driving this inflation is the food inflation that's over 40%. So the moment the food inflation begin to tank, then the headline inflation will also tank too.
Do you also share the sentiments by some analysts that there should be more, by way of if you like, attacking the situation or meeting it head on? There should be more fiscal response, if you like, to the monetary authorities' moves at best to tackle inflation.
The perfect solution is going through the fiscal way, whether we like it or not, because actually what stoke it is for deflation. Why? Because of its insecurity. The moment there is security, I grew up in a village. I know what normally happen in my village. At times, my father will go to the next city. By the time he's coming back, we'll come back with some packets. Inside it is tomato seedlings. Sometimes they go to the same city and they come back with fertilizer, samples of fertilizer. That is intervention by the government. It encourages them to farm. And the other one is there was this competition. Everybody want to produce the biggest yam. That is the physical part that the government can take to tame this inflation. The moment the food inflation is arrested, discover that the inflation will begin to look down.
And in the bid to do something about it, recently we saw the government, calling for, a tax-free or tariff-free food importation, as you were, for a number of days to curb this and give Nigerians, some lease of life, as you were. So, what is what's the interplay between what the government has tried to do with this particular development?
If they are giving tax-free for food inflation, it's a temporary solution, assuming that because when you import, you are going to sell at a marked up price. But when these are produced from the farm, it becomes cheaper because you are not producing at $1 rate. It is naira to naira.
So is it counterintuitive or counterproductive?
It is counterproductive, because at a particular point in time, if it is discovered that if it's tried for 3 months and the impact is not felt, then they can reverse back to the status quo ante, and that will bring back the situation where we were before.
All right. Now let's also get your thoughts on, what exactly or how exactly this MPR rates compare to other monetary policy decisions made by other central banks in similar economies. What the interplay between one and the other is, especially in sub-Saharan Africa and other emerging economies as ours. We are currently, I reckon, the fourth, if I'm not mistaken, in the on the continent.
You see, CBNs don't just go ahead to increase MPR for the sake of doing it. If you ask me, in other climate and advanced countries, we see that they have inflation rate is single digit, sometimes less than 4%. They don't have any basis of increasing interest rate. It is because of the peculiar problem that we find ourselves in the sub-Sahara. That is why there is a need for the increase in MPR. And like I said, this MPR was raised from 11.5% in 2022. That is now as high as this because inflation kept off increasing. And that was when insurgents entered into the country. So if that situation did come, it was not just, CBN can't just go to increase MPR arbitrarily. There is a cost. So if there is an increase, then there must be a root cause.
This is still Market Insight, and we have been talking about the issues, very, very big ones, as you were, because they do directly and otherwise affect the average Nigerian and their businesses, as you were, whether large scale or medium to small scale. This morning, we've talked about, a lot of things ranging from what it means for the aforementioned, to what it means for the government at all levels, as it were, and what it means for, export-import trade, as it were. And we've been talking about those with Mr. Aruna Kebira, an economist and the MD/CEO of Globalview Capital Limited. Just for an overview, the Central Bank of Nigeria, through its governor, Mr. Olayemi Cardoso, announced this after the bank's 296th Monetary Policy Committee meeting in Abuja on Tuesday. He said that the committee was mindful of the effect of rising prices on households and, of course, on businesses. And he also expressed the bank's resolve to take the necessary and needed measures to bring inflation under control. Now, it's important to note that in the last 3 years, the Central Bank of Nigeria has raised interest rates 12 times. This recent move essentially has gotten Nigerians wondering what is going to happen next, because of course there are a lot of factors at play. We're talking about the recent minimum wage issues, significant depreciation of the naira, which has adversely weakened purchasing power, as it were, as well as PMS and the high prices therein, which has had a negative, or if you like, an adverse effect on transportation cost. And so all of that put into perspective is what we have been trying to get thoughts on today. Now, on a final note, Mr. Kebira, what are your thoughts for, perhaps future measures, future mitigating measures, as an expert, as an analyst? Because, of course, I've mentioned a couple of things that some analysts have mentioned and some, core stakeholders have mentioned. What are your thoughts going forward that all the parties involved can do to give Nigerians a better lease of life? Because at the end of the day, my business is important to me, and whatever happens at the top essentially is going to trickle down to the bottom, where people like me and even the others who hawk and trade on the streets.
I think the first thing is for us to go back to the basics. Let there be government intervention in security and agriculture. If you look at the component of the GDP growth, which used to be the highest from the oil sector, it's no longer from the oil sector, it's no longer from agri, it's not from goods and services. So let the status quo, whether go back to the status quo, let oil and agri begin to lead the contribution to the GDP. And if that happens, the inflation will be tamed. And if that happens, CBN, like I said, do not just increase MPR arbitrarily. They will have every latitude to begin to drop it down. And what the market is just waiting, assuming this last MPC meeting, that it was a reversal, a decrease of 50 basis points, we'll see another situation. So the moment the economy understands that the CBA is not positioned to reduce the MPR, then we'll see that things will begin to come. Because if inflation come down and MPR will come down, the cost of funding will become cheap. Then the organized labor sector will have access to cheap funds, and they'll be able to increase their capacity. And there'll be expanded capacity utilization and more profit.
Thank you very much indeed, Mr. Aruna Kebira, for joining us on the program.
Thank you for having me.
Yes, Mr. Aruna Kebira is an economist, and he is the CEO, the MD/CEO of Globalview Capital Limited, a brokers dealer firm with the Securities and Exchange Commission, as well as a trading license holder of the Nigerian Exchange Limited. He's joined us to give us his thoughts this morning, and that's Market Insight today. But before we go, we'll take a quick look at the currency markets. The official market, the naira is trading to the dollar currently at 1,515 naira, and also on Tuesday it traded to the dollar at 510 naira. On Wednesday it traded at 1,510 naira as well, and went back to 1,515 naira on Wednesday, which was yesterday, and it still stays that way today, Friday, beg your pardon, the 26th of July 2024, and that's all on the official market. That's it on Market Insight this morning. Many thanks for watching. Do join us next week for more interesting and exciting and also insightful editions of the program. Until then, I am David Chiedu. Do have a lovely weekend.
you.